What if I told you that the money in your wallet isn't really yours? That its value, its supply, and even the direction it flows is controlled by an institution you never voted for, can't audit, and rarely hear the truth about. And here's the real mystery. How can one organization influence every dollar you earn, save, or borrow, without ever touching your bank account? Today, we're uncovering the hidden system that quietly shapes your life, your future, and the entire global economy. And most people don't even know it exists. Stay with me, because the Federal Reserve's power is far greater than you've been told. Setting the stage background plus tease. The United States Federal Reserve, often called the Fed, is treated like a background character in the story of money. But in reality, it is the writer, director, and editor of the financial script the world follows. Its decisions decide how expensive your groceries become, how high your rent goes, how much interest you pay on loans, and even whether the economy is booming or collapsing. But here's what's strange. Most Americans can't explain what the Federal Reserve actually does. Even stranger, few understand why it was created in the first place. Because behind its polished image lies a messy history of secret meetings, financial panics, power struggles, and a design that was never meant to be fully transparent. And once you see how it really works, you'll never look at money the same way again. Origins, where the Fed really came from. The story begins long before the modern Fed existed, back in the early 1900s. When America's financial system was chaotic and unstable, banks failed often. Runs on banks were common. Confidence in money collapsed repeatedly. Then came the breaking point, the panic of 1907. Markets crashed. Banks went bankrupt. The U.S. economy nearly fell apart. This crisis terrified Congress.
But it also created an opportunity. In 1910, a small group of bankers and politicians boarded a private train headed for Jekyll Island, a remote location off the coast of Georgia.
They met in complete secrecy. No press, no public oversight. Not even their full real names were used. Over several days, behind closed doors, they designed a central banking system that would eventually become the Federal Reserve. 4 years later, in 1913, the Federal Reserve Act was quietly passed, and the most powerful financial institution in American history was born. Not by democracy, but by necessity and influence. The rise, how the Fed gained control after its creation. The Fed began taking control of 3 core functions that would define its power. 1. Control the supply of money by printing, removing, or influencing how much money exists. It's 2. Control the cost of money through interest rates that decide how expensive borrowing becomes. 3. Control the stability of banks by acting as a lender of last resort during crises. But something unexpected happened during World War I. The government needed money fast, so the Fed helped fund the war by buying government bonds. It was the first major test of its power. And from that moment, the relationship between the government and the Fed changed forever. The government could spend more. The Fed could print more. And inflation silently began to rise. By the 1930s, the Great Depression hit. The Fed's early decisions made the crisis worse, not better. Millions lost their savings. Banks collapsed. The economy crumbled. To fix the fallout, the Fed gained even more control. More authority over banks. It's more influence over credit. More power over the money supply. Ironically, every crisis that exposed the Fed's flaws also expanded the Fed's power. Breaking point, the moment that changed everything, the biggest turning point came in 1971, when President Richard Nixon made a decision that fundamentally changed global money. He removed the U.S. dollar from the gold standard. Before this moment, dollars were tied to physical gold. You could redeem your money for something real. After 1971, money became just paper. Or more accurately, money became whatever the Federal Reserve said it was. No limits, no backing, no physical restraint. This unlocked a new era of financial control. The Fed could now expand the money supply massively, cut interest rates aggressively, support government spending without limit, shape the economy with far more flexibility. But flexibility comes with consequences, because when money is no longer tied to anything real, it becomes incredibly easy to manipulate. Fallout, what the Fed's power created once the Fed could create money freely. Several things began happening. 1. Inflation became permanent. The cost of living has risen almost every single year since leaving the gold standard. 2. The wealth gap exploded. Asset prices like stocks and real estate soared, benefiting the wealthy first. 3. Debt became the foundation of the economy. Government debt, corporate debt, consumer debt, student debt. Almost every part of modern economic life now relies on borrowed money. 4. Crashes became more frequent. Major crises. 1987 crash, dot-com bubble. 2008 financial crisis, pandemic crash. Each one required aggressive intervention from the Fed, which created a dangerous cycle. Crisis gives Fed prints money, gives markets recover, gives more risk, gives bigger crises. The Fed became the firefighter. But also, unintentionally, the gasoline supplier. Failed fixes attempts to control the monster over the decades. The Fed has tried to balance the system, raising rates to fight inflation, cutting rates to fight recessions, buying bonds to support banks, selling bonds to reduce money supply, creating lending programs during crises. But these fixes come with side effects. When the Fed raises rates, borrowing becomes expensive. Businesses slow down. People lose jobs. When the Fed lowers rates, debt increases. Assets inflate. Inequality grows. When the Fed prints money, short-term stability, long-term inflation, every solution creates a new problem. And every problem pushes the Fed to take even more control. Which leads us to today. Modern parallels the Fed's power in 2024 to 2025 right now. The Federal Reserve influences your life in ways most people don't notice. Your rent is rising? Partly because the Fed kept interest rates low for a decade, inflating real estate. Groceries cost more? A result of money supply expansion during the pandemic? Your credit card interest is 25%? That's tied to the Fed's attempts to slow inflation. Your job feels unstable. Companies react to Fed policy before anything else. Your savings lose value every year. Inflation consistently outpaces most bank interest rates. And the most shocking data. Over 80% of all US dollars in existence today were created in the last 2 decades. Money isn't scarce anymore. But real opportunity is. History shows a repeating pattern. The Fed intervenes. The economy adjusts. A new imbalance forms. The Fed intervenes again. Its loop never ends. Because the system can no longer operate without the Fed's influence. Final takeaways: clear and impactful. Takeaway number 1. The Federal Reserve controls money by controlling its supply, price, and flow. You don't need to touch someone's wallet to control their wealth. Takeaway number 2. Every crisis has expanded the Fed's power. From 1913 to today, each financial disaster strengthened its influence, not weakened it. Takeaway number 3. Modern money is built on confidence, not backing. If trust breaks, the system breaks. Closing warning: as long as the Federal Reserve has the ability to create money out of nothing, your financial future is tied to decisions made in rooms you'll never enter by people you'll never meet, using tools you'll never control. The real question isn't, does the Fed control the economy? It's, how much control are we willing to give to a system we barely understand? Call to action: natural. No pressure. If you want more deep dives into the hidden systems that shape your money, your future, and the global economy, make sure to like, subscribe, and share this video. The more people understand how the system works, the harder it becomes for that system to work in the shadows.